I'm still quite bullish on. In fact, we own it in the granny funds because I'm bullish on Bitcoin.
2025 shocked almost everyone. Gold crushed Bitcoin by the widest margin in history. Bitcoin plunged nearly 50% from its peak. Ethereum collapsed below $1,900. Across the crypto market, fear returned to levels not seen since the FTX disaster. To most people, it looked like the dream was over. But one man believes this wasn't the end. It was the setup. Tom Lee, the co-founder of Fundstrat, chairman of Bitmine Immersion, and one of the few analysts who correctly called Bitcoin's explosive recovery after FTX, believes the next 12 months won't just change crypto. They could rewrite the entire financial system. His conviction rests on 3 bold predictions. Bitcoin is about to reclaim its role as the world's ultimate store of value. Ethereum is quietly becoming Wall Street's settlement layer. And digital asset treasury companies like Bitmine could outperform the very assets they're built on. But those predictions are only the surface. Because beneath the headlines, a much bigger transformation is already unfolding. One driven by institutional capital, shifting monetary systems, and a financial infrastructure that most people haven't even noticed yet. If Tom Lee is right, by 2030, the world won't simply value money differently. It will define money differently. And the biggest winners may not be the people chasing the next rally, but the ones who understood where the system was heading before everyone else. This is the story of how the future of money is being rewritten and why the next chapter may have already begun.
But we take a very different approach. One is, well, the 2 biggest differences, maybe I should highlight 3, but the first is the native asset. Bitcoin is a store value, and the ecosystem around Bitcoin wants to, quote, ossify Bitcoin. Not introduce changes, make it always a store value, like digital gold. By contrast, Ethereum is a yield-bearing asset, roughly a 3% yield, and that's because it's proof of stake. So the security work is done by those who are staking ETH, and in return, they get paid a yield. And the ecosystem is developing, and it's the largest ecosystem in crypto, bigger than even Bitcoin. And they are trying to position, and successfully so far, to make Ethereum the financial settlement layer for Wall Street.
This is where the story changes. Most people think Bitcoin and Ethereum are fighting for the same future. Tom Lee says they're not. Bitcoin is digital gold, a scarce, sovereign-free store of value built to preserve wealth. It doesn't generate yield because that's not its purpose. Ethereum is different. It's digital oil, the infrastructure powering the next generation of finance, where assets move instantly and capital can earn yield. And that's where the real battle begins. This isn't just about 2 cryptocurrencies. It's about who will own the financial rails of tomorrow. Michael Saylor and Strategy believe Bitcoin is digital capital, the ultimate form of collateral. Instead of changing Bitcoin, they're building products around it that transform its volatility into yield while keeping the base layer untouched. Meanwhile, Ethereum's ecosystem is attracting some of the biggest names in finance: BlackRock, JP Morgan, Robinhood, and now Bitmine. They're not just buying Ethereum, they're building on it. The numbers explain why. Bitcoin has outpaced inflation almost its entire existence, reinforcing its role as a long-term store of value. Ethereum, meanwhile, generates staking yield that could produce billions in annual revenue as adoption grows. If Bitcoin becomes the world's savings account and Ethereum becomes Wall Street's settlement layer, the biggest opportunity may not be choosing between them. It may be understanding how they work together.
So the entire financial rails probably will run on stablecoins, which run on Ethereum. The second difference is that MicroStrategy has arguably a somewhat passive approach to Bitcoin, meaning they own it and they want to create digital credit. Bitmine is very active in the ecosystem. We've funded we're the lead investor in 3 spin-offs from the Ethereum Foundation, all of which are targeted to strengthen Ethereum and either focused on improving price or strengthening the ecosystem, and there's more. So we are really part of helping shape the future of Ethereum.
Here's the shift almost nobody is paying attention to. Tom Lee argues that the real revolution isn't happening inside crypto. It's happening on Wall Street. Most institutions can't simply buy cryptocurrencies at scale. They buy public companies. And that's exactly why digital asset treasury companies are exploding. In just 1 year, institutional investors in these companies surged by more than 80%. Even more revealing, the number of firms owning multiple digital asset treasuries skyrocketed, with giants like BlackRock, Vanguard, Geode, and Jane Street spreading their bets across the sector. The message is clear. Institutions aren't just buying Bitcoin or Ethereum anymore. They're buying the companies that own them. Today, Strategy controls more than 845,000 Bitcoin. Bitmine holds millions of Ethereum. BlackRock's Bitcoin ETF has accumulated hundreds of thousands more. But this creates an uncomfortable question. What happens if ownership becomes concentrated in just a handful of publicly traded companies? Tom Lee believes this is only the beginning, arguing that Bitmine's NYSE listing and growing institutional access make it a unique gateway to Ethereum. But there's another side to the story. Bitmine's explosive rise has depended on investors valuing its shares above the assets it owns. If that premium disappears, the selling pressure could spread far beyond one stock. The digital asset treasury revolution is real. The only question is whether the foundation beneath it is as strong as investors believe.
I mean, I think if someone is owning Ethereum, then they can buy the coin, and they can stake it, they'll be fine. But there's two kinds of investors that can't do that. One are institutional investors. The large asset managers that run huge funds can't buy ETH, the native token, because they would actually have to maintain a crypto wallet. But they can buy equities. Bitmine is in the Russell 1000 large cap index, and it's traded on the NYSE. So it's the only Ethereum large cap stock that they could buy today. So if you're a large manager in Boston and you want to have exposure to Ethereum, you have to buy Bitmine. We are betting on the future of Ethereum as a settlement layer for not only Wall Street, but for how robots communicate. And we're part of the ecosystem. So I think you should think of Bitmine as highly, highly integrated into Ethereum.
Now imagine it's the year 2030. Not because it's guaranteed, but because this is the future Tom Lee believes is already being built. In his vision, Wall Street doesn't just use blockchain, it runs on it. Stocks, bonds, treasury bills, and even money market funds are tokenized, settling instantly on Ethereum instead of taking days. Trillions of dollars move around the clock, while AI agents quietly manage investments, rebalance portfolios, and execute transactions without human intervention. Ethereum becomes more than a blockchain. It becomes the operating system for global finance. Bitcoin, meanwhile, plays a different role. It remains the world's digital reserve asset, the collateral behind corporate treasuries and digital credit products, securing a monetary network that rivals gold and even sovereign debt. It sounds revolutionary, but every revolution comes with risk. A financial system powered by algorithms could spread market shocks in seconds instead of days. AI agents following similar strategies could trigger violent flash crashes before humans have time to react. And if institutions continue buying treasury companies instead of the underlying assets, trouble in one company could ripple across the entire crypto market. That's the future Tom Lee sees. Not a prediction, a possibility. And the decisions being made today may determine whether this new financial system becomes history's greatest breakthrough or its next great stress test.
In bear markets, people don't talk about stocks. When Apple was down, no one talked about Apple. Right. So we know price drives sentiment, and crypto's been in a drawdown, but you'd expect at the bottom people to be bearish. In fact, that's exactly what makes a bottom is, it's you deleverage people and then you reset expectations. Crypto has so many catalysts. I mean, since the end of June, Ethereum has outperformed memory stocks by 72 percentage points. I mean, that's pretty huge. People have lost 40% in memory and they've made almost 30% in Ethereum. And now the Clarity Act is on the, as they say, in the 1 yard line. That will open up the floodgates because the Clarity Act is going to provide a single agency to have oversight of the entire crypto economy. That doesn't exist today. It's state regulated and there's fragmented regulation. Japan and other countries are already taking a similar version of Clarity Act. Russia just passed one. So the US obviously has to catch up. This is going to create institutional adoption of crypto. That's a bigger market than anything that's existed in crypto before. So I think it's, if someone's been in crypto a long time, they've been in the hobby phase. I'd call it Ethereum 1.0 because it was meme coins and NFTs. This future market is stable coins, payment rails. Robinhood wants to tokenize everything. And by the way, they could have built on any blockchain. They built Robinhood chain on Ethereum. They launched it. It's already a breakaway success. More than $1 billion of volume daily on Robinhood chain. And it's generating, Robinhood might make $1 billion a year from this chain that they just launched. It is a massive, massive hit for them. So I think every Wall Street firm is watching what Robinhood did and realize there's a lot of money to be made tokenizing assets onto Ethereum.
Tom Lee's vision is bold, but every bold vision deserves an equally hard question. What if the future doesn't unfold the way he expects? For starters, much of today's tokenization isn't truly decentralized. Many of the biggest projects are permissioned, heavily regulated, and accessible only to large institutions. It's less of a financial revolution and more of the old system running on new technology. Then there's Bitmine. Its extraordinary rise has been fueled by investors valuing the company far above the assets it owns. But if Ethereum stalls, that premium could disappear, forcing a painful reset, just as we've seen before with other crypto treasury companies. And what about AI? Lee sees intelligent agents making markets more efficient, but history suggests algorithms often move together, not independently. When they do, small sell-offs can become violent, market-wide crashes in minutes. Then there's gold. Its massive outperformance wasn't just another winning trade. It may have been a warning that investors are losing confidence in the traditional financial system. So the real question isn't whether tokenization is coming. It's whether Ethereum remains an open, permissionless network or gradually becomes another piece of the very system it was meant to disrupt.